Pricing is a really crucial topic, because I think the important thing when providers are doing mobile money or branchless banking systems in general is they need to feel adequately rewarded for what they're doing. And in fact, I think beyond that, the amount of spend they need to do on marketing, on educating customers, is very large. So I personally think that the pricing needs to be quite generous in the early phases, not so that they can derive more profit, but rather so they can spend more time and effort talking to the customers, explaining the value proposition to customers, supervising the BC channel. When you're doing the pricing too thin, there's no margin there, that's where you get to situations where we've seen many pilots in India where it's all about deployment and there's no follow-through afterwards, because no one has any interest in following up afterwards. It has to be a rich pricing so that on an ongoing basis, all the players involved, the bank, the BC, want to do as good a job as possible and grow the pie as fast as possible. So from a pricing point of view, what is crucial then is to be able to identify what are the drivers of customer willingness to pay. What is the customer willing to pay for and what it's not? That should not be a dogmatic decision based on perceptions of what poor people ought to pay for or not ought to pay for. Let them tell us what they're prepared to pay for. And in general, they'll think about it. I'm prepared to pay for stuff if my alternatives are not very good. If I have good alternatives today, I'm not going to be paying a lot just for the privilege of doing something electronically and having to learn about this. It's just not much incentive for me. In fact, I might not even switch on when you're telling me about these things. But if the benefit relative to the alternatives is very high, sure, I'm going to be willing to pay for it. Let me give you an example. If you just give me a no-frills account, do I really want to pay for that? No, because the no-frills account probably is just as a single pot of money is not solving any of my problems necessarily. As I explained earlier, people wanted to fragment their money. Now you're presenting something that is an alternative that doesn't make life easier for me. In fact, it makes it more difficult because now I need to mentally separate what's in that account. I'm not understanding this. I'm not really prepared to pay for it. So I would be completely focused on the notion of customer willingness to pay. And customers will guide you there. They'll tell you whether this is solving my problem or not. I wouldn't prejudge what they'll find useful. I wouldn't prejudge what they find fair pricing. Because if I'm able to do something more conveniently, again, that's bus fares saved, that's time that I no longer have to spend on the bus, that's humiliations I may no longer need to suffer when I go to the big city to make a payment. If I can save myself all of that, I'm happy to pay, because I'm now more productive, I have more time, I have spent less money otherwise. So I would be extremely practical about setting prices. I would not be coming with any notion of fairness, and I would come with a notion of let customers tell me what they're finding useful. Think that in the context of remittances. The value that you give to people by being able to walk down to their corner shop and immediately in real time send money back home. It's a tremendous value for people. So don't restrict the growth of this system by artificially lowering the prices. Let them pay for it, and let the provider then spend that extra money in promoting the service, in growing it faster than they otherwise would be, in making sure that the business correspondents are adequately supervised. This needs to be a very well-greased channel throughout. What the provider needs to do is focus on cutting costs, make it as cheap as possible in terms of on the cost side, not necessarily on the pricing side. I see in India perhaps too much of a focus on adding capital costs on these systems. There's too much of a focus on point-of-sale terminals when people already have, and stores already have, card readers in the form of a mobile phone. There's too much of a focus on biometrics, when for small value payments, a PIN can do just as well. If a PIN is good for me, it's safe enough for me who have a lot of money, why wouldn't it be good enough and safe enough for poor people? So the challenge on the provider side, make this platform as low cost as possible. Then find where the pockets of willingness to pay are, and use that money then to ensure you're delivering an excellent customer experience to the customer, one that is trusted, well communicated, well supervised.